Good morning and welcome to Market Day Report. I'm Chris Swift. We're going to see what the grains closed at in the overnight sessions, and unfortunately I think they were a little bit soft last night. So the corn market down a half, 441 3/4. That's where we're going to start off at 8:30 this morning. May down 3/4 at 453 even, and the July contract down a quarter at 462 1/4. Note that December contract down a half at 474 1/2. So soybeans, they were kind of mixed this morning and still are. I got to March up a quarter, 1206, 03 3/4 the low. And if I'm not badly mistaken, Friday's low was 1203 even. May's down a half at 1217 3/4. The July contract down 1227 1/4. Chicago wheat this morning, it is a little bit softer, down 4.5 on the March at 478 even on the low of the day. May 589 1/2 down a nickel. New crop July down 4 3/4, 597 1/4. Kansas City hard red winter wheat made new contract lows yesterday. March down 1 3/4 at 592 1/4. May down 2 1/4, 596 1/2. And that July new crop contract lost its 6 handle for 599 1/2, down 3. Let's see how our spring wheat traded last night, overnight. Up a half on the March at 680 3/4. May unchanged on the day at 690 1/2, and July down a quarter at $7 even. I got my guest Brian Hoops on the line here with me. He is with Midwest Marketing, and Brian, unfortunately, we are in a downtrend. The market is not going up and down; it is going down. Do you see any support in either corn or beans right around this area?
Well, good questions, Chris, and good morning, by the way. Well, yeah, we are in downtrending markets here for the grains, no doubt about it. We hit contract lows this week in corn. We've done it in Kansas City wheat this week. You have beans closing lower 8 out of the last 10 trading sessions. And, if we touch and trade below that 1203 mark, which was last Friday's lows, last week's lows, we're probably seeing a lot of sell stops underneath it. That'll push us even further. So there's, that's kind of your support area initially, at least 1203 on that March contract. Corn, you're really searching for some support. When you're at contract lows, it's hard to find that technical support. There's a downtrending channel that we're trading in, and we've kind of bounced off of that seemingly the last several trading sessions, the bottom end of that channel. But, that indicates prices are likely to continue to work lower until you break out to the upside and maybe see some fun short covering. So, there's not a lot of news out there right now. Longer term forecast calling for more rain for northern Brazil. U.S. dollar rallying again this morning. All that kind of combines to have a weak undertone to these markets. No private export sales, no weekly sales this morning. They're delayed until tomorrow, and just kind of very little news for these grain traders to react to, and that I think kind of keeps us on the defensive here going forward.
So I kind of wonder, looking at it, I know we're kind of hugging down the lows there, and there's really not a great deal of aspect for any rallies. Do the farmers then go ahead and make those difficult sales down here and then make some kind of preparation to re-own it in an options contract, look for a little bit different change in the basis, maybe something? But, seemingly with the market going down, we probably need to take some kind of action, don't we, before the bottom just goes down to $4?
Yeah, you almost have to do something. The market this fall coming off the combines telling you very clearly you should store your crop. We don't want it during the harvest time frame, but store it and sell it for May, July delivery, summer delivery. I've never seen carries like we saw this fall. Usually 30 cents for carry from December to July corn is pretty normal, 28 to 30 cents. It was 46 at one time. We had never seen those type of carries, and the market was clearly telling you not to store the crop unprotected, not to hang on to it. It didn't want it in the fall and the winter months. And now if you're faced with looking at lower prices in here and no protection, you almost have to get some sort of protection. Cash sales are very difficult to make when we're at contract lows. It's not when you want to be making those sales. Maybe you could look at doing some sort of a short-dated option strategy to retain that ownership until basis improves, or at least until the market starts to rally. That'd be kind of my play at this point in time. Maybe buy puts and finance them with some out-of-the-money or call options anyway to give yourself some protection. So Yeah, it's kind of a tricky situation if you're looking at having to make cash sales here soon. You may want to also then turn around and look at some reownership strategies, but I don't think you want to do it here in the next 3 to 6 weeks. Probably wait until we get into either South American safrinha corn crop growing season or at least the U.S. growing season.
Absolutely. Brian, stick with us. We're going to go away and take a real quick commercial break. We're talking with Brian Hoops from Midwest Marketing. We're going to be right back and talk some cattle here in just a minute. Stay with us. Welcome back to Market Day Report. We saw a little bit of firming in the cattle market yesterday afternoon on the close. The Feb contract didn't do much, but the rest of them kind of in the back did, and we had quite a bit of volume of trading yesterday. Volume down 2 ticks. February down 2 ticks, 173.10. The April up 45 at 175.62. The June contract up 62 at 172.80. And I did notice an uptick in the open interest. We're about 272,000 contracts now. The feeder cattle performed a little bit better. We were up 87 on the Jan at 228.42. That last index is trading around 225 and change. March up 95 at 229.77, and April up 92 at 235.20. We'll wrap it up with the hogs this morning. They were a little bit firmer yesterday with Feb up 67 at 71.45. April up 40, 77.97, and the June contract up 12 at 92.17. I'd like to invite Brian Hoops back in with me. Brian, we've seen the cash market and the boxed beef really jump. Couple of maybe $7, $8 now total. I think it was a little over $2 yesterday. I think our our packers probably need some product here, and cattle feeders not really wanting to let go of it just yet.
No, you're exactly right. Yeah, we've seen a tremendous improvement in the box beef values, which we suspected because of the slow kill speeds. We have had 3 holiday shortened kill weeks here recently, plus you had the big snowstorm coming through that delayed and really shut down some plants in Nebraska, South Dakota, Kansas even because of that snowstorm. So cutting that slaughter pace is going to prop up those box beef, and in turn, it restores packer margins. They were negative $180, $85 just a couple weeks ago. Now they're back to at least even money. So they can pay up for the cash markets. They're probably going to have to this week. I thought it was interesting. We've heard some bids on Tuesday and Wednesday morning in that 167 range in Nebraska and in Kansas. And, the market kind of weakened off that news. And as packers raised those bids throughout the day, the futures market started to rally, especially after midday when we heard bids in the 173 range. So we haven't seen any cash trade yet, but it's coming here soon. A lot of times we wait until that cattle on feed report on Friday afternoons. Right around that time, that's when we'll see that cash start to break loose. Maybe that occurs this week as weather is improving across the plains as well. But I think you're going to be at least a steady money type trade this week.
It sure seems like it. And I know that we need to get that spread up on the between the starting feeder and the finishing fat, because it just keeps widening, and we really need that to narrow. And I think the best way to do that is to see the fat market go up. Brian, certainly do appreciate you taking the time to be with us this morning. As Brian Hoops, he is with Midwest Marketing. And Tammy, I'm anxious for the opening bell to ring and see how we're going to start this morning.
Could be another interesting day.
Absolutely.
All right, thanks, Chris.